Hi guys, I'm not sure if me and Lizelle mentioned in the last video, we're currently abroad at the time of this video.
That's right, it's tattoos. Lovely.
To go on.
So I'm going to make this a very quick one. All the videos we're doing now, they're not edited, they're just completely raw. So anything I read or I get updated on, the video will basically be based on that, essentially. So today is going to be about interest rates. So the big topic that everyone's talking about is like when the interest rate is going to go down. So the interest rates at the moment, the cheapest one you can get is around 2.79 at the top of my head, and the lender that's doing it is charging a fee of 3% of the loan, which is a lot of money. Suppose your loan is, let's say, £300,000, your percentage fee will be like really high. It'll be 9 grand just for the product fee, which will be enrolled into the loan, and it's something to think about. A lot of people can go onto this rate because it puts the payments down per month. Literally, compared to a few years ago, your payments would have been, let's say £600. So now those particular payments will be £300 because the rate is roughly halfway if you're looking at an interest-only mortgage for an investment. And I think that a lot of the buy-to-let investors will get more motivated with this new rate, and I think it's also reflected for residential mortgages, if I'm not mistaken. So this lender is a big lender, and directly speaking, it's the Mortgage Works. So the Mortgage Works is a well-known lender. They mainly deal with buy-to-let products. So they're offering a rate of 2.79%. So if you're thinking about investing in a property and you want to purchase one now, then the Mortgage Works is a good one. If you fit their criteria, then yeah, they're a good lender. I think one of their criteria to be met is that you have to have an income of at least about £25,000. At least one of the applicants on the application process in the beginning has to have about £25,000, unless this has changed otherwise. Another update is, I think there's quite a few lenders that are looking to relax their criteria, and what I mean by that is, an example. What I mean by that is, they're looking to increase the leverage. So if you earn, let's say, 10 grand a year, now it's roughly 4.5 times your earnings if you're earning above like a salary of 30k though. And they're looking to increase that to 5 to 6 times your salary now. So your loan value, or your loan that you can take out to buy a house, will be a lot more higher. And a lot of lenders are also offering more products that are 5% deposits. So you can actually purchase a property with a lower amount of money to start, with a lower amount of deposit money. So there's a lot of things there to stimulate the market, to compensate for what the government has done recently, which is increase the stamp duty for first-time buyers, for home movers, and investors as well. So is it a good time to buy? Well, if these things I've mentioned fit your circumstances, the answer would be yes. And if you're kind of like prepared to make those payments, manage a property, take that kind of workload on, then yeah, why not? If you have any questions related to anything to do with property, just comment below, or go to our Instagram page, which is JL Property, and leave some questions there. Private message us. Yeah, until the next video.
To go on.